Latest action on the Pea Coast. Stay with us.
The world's most important source of power is in this room. The power of knowledge, politics, philosophy, economics, war, history. The knowledge you need to understand today's complex, constantly changing world. Now, Knowledge Products opens this power to you through compelling audio cassettes in the Audio Classic series.
The others staying their position in the short-term end, and that maybe it's time to nail down some of these yields. That's the way it looks at the moment, anyhow.
Okay, how about the crude oil market? We are seeing another rally there, up 17 cents from March crude. What's the talk there?
Well, you did have to mention that, didn't you? that's one of the things that has caused some of the oscillation, and one of the reasons that bonds and the futures now, which are trading very nervously and erratically, are well off their best levels, just about even now, in fact, in the futures.
Okay. Now, there's another topic that I want to address here, Ed, this morning. There was a flash on the Knight Ridder Financial News Service this morning that suggests that savings and loan institutions may dump these so-called residuals, collateralized mortgage obligations, that type of thing. What's happening in the mortgage-backed securities market?
Well, the mortgage-backed securities market has been nervous partly for that reason for a while. These are extremely arcane and difficult instruments to understand, and like repos, they sometimes get traded by people who don't fully understand them. And that, again, may be one of the reasons why a little bit of emphasis on governments, on treasuries today.
Is it something to worry about as far as the thrift industry is concerned, or is it just something that's kind of tangential to the real problem?
I would say at the moment it's a trading event, but I think the regulators have probably got their eyes on it.
All right, Ed, anything else we should be watching today?
I think that's about it.
All right, Ed.
They're still watching for money to come in because this has not been a very heavy dump.
Okay, thanks, Ed.
Okay, thanks, Ron.
Ed Hart from the Financial News Network. As you know, he is on the floor. Other areas, of course, that we're going to want to keep an eye on will be the meats, which are suffering a decline today, as you can see on the futures boards. The grains have been very volatile in recent sessions. As you know, the crop report released on Friday by the U.S. Department of Agriculture showed less damage than expected from last year's drought, and also served to knock the grain markets over the last couple days. We have seen some very sharp downward action in soybeans, soy meal, and soy oil. Wheat, however, held up rather surprisingly. Yesterday, there was a report out of the Soviet Union that showed that the harvest there was lower than expected, and that provided some support for the wheat market. There's also some talk that the winter wheat market here in the United States may yield a smaller than expected crop given some unfavorable weather conditions, as pointed out by Peter Levitt yesterday. He was talking to Diana Karicki on Market Watch AM. Crude oil prices continue to rally. There is considerable optimism that OPEC will keep its production cutting accord intact, and so that price continues to rally with spot crude above $19 a barrel.
With that kind of return potential, $2,000 to $3,000 in maximum risk and $17,500 return potential, we believe it's a great investment opportunity for investors in the coming year.
Right. Investment World viewers interested in receiving International Trading Group's latest report, the surge in soybeans, can do so by calling 1-800-541-1122. This valuable report is free and will describe why ITG sees a window of opportunity in the soybean market. By calling now, you'll also receive ITG's Option Investor Kit. This free information package will show you how you could take advantage of investment opportunities ITG foresees by purchasing options in such markets as agricultural commodities, U.S. Treasury bonds, the bid and ask prices, as well as the gold and silver content. Its information is easy to read and is gathered from market research, coin conventions, and electronic trading networks. If you're one of the many investors who has diversified their portfolio with coins or are interested in becoming familiar with market prices from an independent source, the Coin Value Research Guide is the publication to use. Know the prices before you purchase the coin. Call now to order a year subscription for only $49. 1-800-922-3131.
Howard Ruff is one of the most well-known mavericks on the financial scene today. His bi-weekly newsletter, The Ruff Times, still has the largest circulation for a publication of its type and boasts the highest renewal rate in the industry.
Theory newsletter. And in his place at 8:30 or 11:30 Eastern Time will be Robert Ortner with the Commerce Department to talk about this morning's trade figures.
All right, well, we have the Dow Industrials now trading with a loss of about 1/3 of a point on this session. Here is a look at how the broader market is performing. The NASDAQ National Market Systems Composite is down 0.07 on better than 28 million shares. The American Exchange Market Value Index off 0.44. Volume on the Amex is 3.7 million shares. Back in a moment with a look at a CEO in the spotlight. Financial Group in Chicago. And Bill, I'd like to begin with the reaction today in the currency markets to the trade data. What did you see?
Well, when the trade data came out, we had, well, before it came out, I should say, we had the markets all trading on the downside in the currencies over here. After the trade data came out, we went to the plus side. However, the market since then has given up most of its gains in here. It seems that that trend that we're seeing developing with the stronger dollar continuing to take hold over here. We were higher than most expectations, although it was actually pretty much in line with what I was thinking. So no real surprise in here, and I think the trends that have been established seem to be taking hold again this midday session right now.
Would you recommend taking, at this point, assuming that the currency futures will continue to move to the downside then?
No, I really don't. I have no recommendations absolutely in any of the currencies. Aside from the Canadian dollar, we continue to recommend to hold on to those long positions there. But I don't think you want to be a seller of the currencies down at this low level, considering they've fallen so far. And I think it's suicidal to be a buyer down here. You're walking in front of a train.
When we were talking about the grain and bean markets yesterday, Bill, you mentioned that if we saw a weak close in the soybean market and also in corn, it was probably time to get out. Is that how you read yesterday's close?
Not really. I think that the market did some pretty good stabilizing. The soybeans right around the 70 area, the 770 area. Today we're sharply higher, half cent higher in the markets. But seriously, I think that we could be putting in a bottom in this market right now. I think the worst we're going to do is go sideways. I wouldn't look for a major up move over here. The two markets that I do like the best are continuing to talk about the oats and also, of course, the wheat market, which performed extremely well yesterday.
Would you recommend taking long positions in those markets now?
Yes, we are currently long, and I recommend holding on and adding on any dips in those markets. And if you want to be a bottom picker, looking for quick scalps in the rest of the grains, I think that's in order also.
All right, Bill, thank you very much, and we'll check in with you again tomorrow morning. Bill Kaiser is president of the Kaiser Financial Group in Chicago. The U.S. dollar has seen some very interesting action today in reaction to that trade data. As we reported, the November gap came in at $12.5 billion. That is certainly at the high end of expectations and a bit more than most analysts were looking for. However, the revised October gap was a little bit narrower, $10.26 billion. So we're getting somewhat of a mixed picture. Now, usually the dollar would decline on a wider trade gap than had been anticipated, but that happened very briefly today, but very quickly the dollar resumed its move to the upside, so much so that we saw concerted central bank intervention with the Federal Reserve, the Bundesbank, and a number of European central banks to sell the dollar above 1.85 Deutschmarks. Now, the dollar's resilience here is a function in large part of the dollar's bullishness since the beginning of the year. There is a thought that the high interest rates in this country make the dollar very attractive. There is also some increasing talk that perhaps the trade gap is no longer quite the focus it used to be. There is some thought that if the economy slows down a bit, the trade gap will self-correct if Americans buy fewer imports. On the negative side, though, if our export business does not pick up, and it fell 2.3% in the month of November, that will not improve the deficit very much. As you look at the rest of the price boards, keep an eye on the energy market, where we continue to move higher today. Crude for March delivery is up 13 cents at $18.21. That's 6 cents off the high of the session. There will be a meeting later this month among OPEC and non-OPEC producers to discuss non-OPEC output possibly restraining itself in order to shore up the oil market.
Diana Caricchi is back now with a closer look at what's happening in the futures markets.
Well, we're going to take a look now at the stock index futures with Barrett Lawald, who is, of course, with Lind Waldock in Chicago. Barrett, I would like to ask you your thoughts on the rallies we've seen recently in the stock indices. Of course, a pullback yesterday and today. But what do you make of the longer-term move to the upside we've seen?
I really like the prospects for the market nearer term. The fact that we're holding up as well as we are today in the wake of some disappointing earnings reports is, I think, a good sign. The market is a little out of breath here, but as perceptions increase that the dollar may have turned and may be entering a bullish phase, I think you're going to see good demand from foreign interests for all dollar-denominated assets, both bonds and stocks.
Now, we were unable to set a new contract high in the March S&P, which is at 288.50. How important a hurdle is that?
That's a major problem. Now, that particular contract high was set back in October, so the premiums then were pretty rich for that particular contract. If it does not exceed that within the next week or so, it's going to stand on the charts as a double top, and it'll be a very negative feature.
What do you think the prospects are for getting over that barrier?
I think they're pretty good. My floor sources are telling me that they like the quality of the commercial institutional buying they're seeing here today. And after a retest of the lows, we may work higher and take out today's highs. So I think we might be able to take that contract high out.
Okay, let's wind up with a look at the support and resistance levels across the board, Barrett.
In the March S&Ps, we have support down at 281.60 and resistance overhead at that 288.50 to 55 level. In the composite March, we have support down at 158.30, resistance overhead at 162.40.
All right, Barrett, thank you very much. We'll be checking in with you again in a week. Barrett Lawald is with Lind Waldock in Chicago. Here is a look at the latest quotes on the futures boards, where you can see that we're now trading with fractional advances in the stock index futures, a good 2 points below the 288.50 resistance in the March S&P. The interest rate futures had a very choppy day of it today, reacting to the trade data out of the Commerce Department, which showed a deficit growing to $12.5 billion on the trade front in November. The dollar has also rallied despite that news, so much so that we saw another round or couple of rounds of concerted central bank intervention above 1.85 Deutsche Marks. Among the currency futures, the Canadian dollar is the loan contract, not the loan, the Canadian and Australian dollars trading on the plus side. Canadian dollar has very strong interest rates that's showing up that currency. The Aussie dollar is being shored up, going into an important trade number out from down under tomorrow. The metals markets are not seeing a lot of action in gold and silver, but we are in copper, quite a sell-off again today on thoughts that the Peruvian labor situation is quieting down a bit. We may not see a strike there, and that's good for supplies. Grain and bean markets, after a couple of very steep sell-off days, are continuing to the downside, but with much less frenzy than we have seen recently. Wheat has seen some positive export news lately and is standing up fairly well. Feeder cattle today is moving a little bit to the downside. It was shored up earlier in the week by the losses we saw in the corn market. Losses in corn and beans generally good for feeder cattle. In the energy sector, we're moving higher again today in the crude oil itself and also in heating oil. Got above resistance at 51.50 in March heating oil, so we have set a new contract high. In sugar, still a lot of trouble around that 10-cent level. We've fallen below it again today, and we're getting very close to support at 1,300 on March cocoa.
Earnings also were slightly under consensus on a yearly basis. Actually, they're only 1% off the consensus. The stock went down and has now rallied back to where it's even, which is another positive factor because so many people do look at IBM and their spirits are either improved or dampened depending upon how IBM acts. And right now it's trying to act better.
IBM, $3.97 versus $3.47 of a year ago. Less than expected, as you mentioned. Any particular reason for that?
No, I think that we can look at Wall Street and say that their projections were just a little bit too optimistic. Looking at the whole year, however, the consensus projection
to 45.02. And now with more on commodities and futures, Liba.
Thank you. We'll find out what are the culprits for that decline in the CRB index as we go over to Brad Northern, who reports on a variety of markets at this time every day. Good morning, Brad.
Morning, Liba. And looking at the currency market, the first thing that comes to mind is we've had a normal type of trade in respect to a number being reported early in the session where you've had wide swings on either side of last night's close in the Swiss franc. My opinion is, and after I've seen this at this point, that any close below 63.35 on the March Swiss franc can be sold. Keep in mind your risk in the trade, however, is going to start out to be $1,000. We'll narrow that stop down as best we can by tomorrow if that develops. In the cotton market today, the market struggled a bit yesterday to try and keep up above the 60-cent level. Once again today, we seem to be striking out toward the same endeavor. I don't see anything here today that would make me want to take a position on either side of the cotton market, but maybe by tomorrow we'll see something develop. Lumber market last night didn't do much for us on the upside. Looking tonight, closed below 190 in the March lumber, and I would be aggressively short that market if that were to develop. This would also coincide with a negative close in the Treasury bond market, at which time I would be aggressively short the Treasury bond market if that were to develop as well. In the heating oil and crude oil markets, both markets seeking new high levels here. The market seems to be pretty well supported. However, I think it's, in my opinion anyway, it's getting a little bit tilted on the long side. Therefore, any negative close in heating oil and crude oil, both tonight on the negative side, I would be aggressively short on the crude oil. In the sugar market, not too much action there today, a very light trade. In the coffee market, we're still long and holding there. Orange juice down 75 points in lack of weather. In the cocoa market down 7, having a difficult time dealing with a weaker British pound today. That's all I have today, Liba.
Brad, thank you very much indeed. Let us consult the scoreboards for the latest price quotations and update the action as much as time allows. The stock index futures doing better on the day and up a full point this time, having successfully tested the support underneath at 284.50. The bidders did come in and have moved the market higher. It's questionable whether there will be an assault and a successful one today at the highs of 287.50 to 288.50. The premiums are not warranting any buy programs as yet. Currently around 229, but expanding and improving. The fair value today is 192. In the financial futures markets, the initial reaction to the trade number by the dollar and bonds was only fleetingly on the downside, but people have been waiting to buy dollars on dips, and with the dollar come back, so too the bonds found some commercial support underneath to the highs, and they're holding pretty much near the best levels of the day. There's good buying of the dollar reported out of Japan. The world generally seems impressed with the President-elect Bush, feeling that his cabinet choices are sound and expecting positive dollar statements in his inaugural address. West Germany reported last night a 0.8% increase in wholesale prices. That is a steep rise and inflationary for West Germany. If the interest rates there are not raised, it will depress the Deutschmark further. The yield curve is inverting a little bit more, the 3-month bill at 8.59, the 30-year at 8.87, and the peak of the hump of the curve is in the 3-year at 9.17. As noted in the energy arena today, the market has been very, very volatile. February quickly lost 20 cents to the March at the outset, but has since recovered. The API statistics last night were supportive for heating oil and for crude. We'll have to leave commentary this time round on the futures markets. While the numbers are showing, let me give you a quick word on the exotics. They are hardly changed at this time. Coffee up in a narrow range. The range in coffee seems to be between 138 and 145. The recent high 144.90. There is an ICCO cocoa meeting coming up tomorrow. The tone is very hesitant ahead of this.
That taking place. Now that means we are at new post-crash highs right now. You're looking at technical news now because your advanced decline line today is retracing more than 50% of the entire drop going back to last March 17th. That is extremely bullish and validates my projection that the advanced decline line, which has worried so many technicians needlessly, will be making new highs during the first quarter of this year. Now, also, I expect to see the Dow close above 2030. It probably will do that today, but it certainly will do it this week. And going through 2030 is another very positive signal. You're 50%.
The fact that the dollar was able to respond in such a positive manner to what looked like a bad trade number tells us a great deal about the posture of the market. How do you interpret the dollar and what is its future?
Well, it does say quite a lot about the way the trading community is slowly learning about the slightly more relaxed attitude of central banks, Liba, on the dollar. They've been testing the upside for the last 2 to 3 weeks since the beginning of the year, in fact, and they're now probing the upside targets of the central banks, and comments from officials are not very clear. I think everyone will try and reach 190 the DM before they find a level that the central bankers are unhappy with. What it tells us is overall there's been an awful lot of pent-up demand for dollars over the last 2 or 3 years. There is a feeling that perhaps it's bottomed now. Corporate flows have been the major force behind the dollars buying this year, and that's what accounted for the purchases of dollars this morning after the trade report came out.
All the while that there was lingering skepticism from corporate clients about the reality of a turn in the dollar, there was more fuel to push it higher. Is there still more money to flow into it at this stage?
There's definitely more money. If one considers a long-term cycle of where we've come from, we've had a 3 to 3.5 year decline in the dollar now, and given the kind of trade patterns that we have with the United States, there are an awful lot of people with dollar exposure that they haven't had to hedge in the past, and all of a sudden they're finding that daily it's costing them more and more money to do so. So there's an awful lot of money still waiting if and when we break certain key levels. One of the things I think the market might overlook at present is a statement from Burl Sprinkle that came out today, and it's very much leaning towards the use of interest rates as opposed to the use of intervention by the central banks to try and defend the currencies. And I think the market ought to look out for something from the Bundesbank tomorrow in their council meeting in terms of higher interest rates from the central bank in Germany.
The official rates might be adjusted upwards, Shandy.
Definitely, yes. I think there is a we are fairly confident that they will raise them by the end of this month, and we would say that tomorrow there's a much better chance, and the market is currently discounting of a hike in the discount rate by 0.5%, and perhaps even in the Lombard rate by 0.5%. That will take it up to 6%. Burl Sprinkle said that intervention doesn't work. And it begs the question, what actually works? And I think the answer is probably interest rates. So we're looking for something from the Bundesbank tomorrow.
Thank you very much indeed, Shandy Modi of Intercapital in London. Let us consult the scoreboards to update the futures progress. Stock index futures doing very nicely and getting over to score a new high of the day of 288.50, challenging the overhead resistance which thwarted its last attempt on the upside. The premiums are also expanding to make it look more positive. A firm tone in the financial markets after the dollar was able to rebound, garnering a great deal of attractiveness for dollar-denominated investments, good evidence of dollar buying out of Japan, and as noted by Shandy Modi, there is a good possibility perhaps of a hike in German interest rates after a 0.8% increase in wholesale prices there. It would save the Deutschmark from falling further. On the scoreboards of the currency markets, we note that the pound is doing very well against the mark. The cross there still above 3.28, and the dollar on its highs against all its foreign counterparts. The stellar performer of the metals arena has again been the copper market. Precious metals reacting primarily to the fortunes of the dollar. Silver, however, is holding at the low of 5.95. Platinum did slip to the downside. The activity in copper has been to the downside. Peruvian mine leaders became more conciliatory in their statements today, suggesting perhaps that a strike is less likely, but the fundamentals on the Chilean side, where operations for production are well below normal, are still fundamentally bullish. The technical aspect of the market is that yesterday's low has held at 144 for the March and 133.50 for the May, which is supporting the market. The energy sector has been extremely volatile. From a technical basis, it is expected that, it is hoped that the March contract will be able to close above yesterday's high in order to continue.
And now we'd like to share with you some news our investors already know. In 1988, his program produced more than a 200% return on investment. More than 200%. Call Robbins at 1-800-453-4444. Robbins, a leader in managed futures investments.
Euro Gold Exchange.
Well, some foreign buying moved the market higher at the open, then some minor sell programs pushed the market lower just a few moments later. Now we have buy programs coming in and pushing the Dow up to post-crash high territory, up around 2231. Market internals are now positive, with advancing issues leading declines by 869 to 466 on the New York Stock Exchange, with 523 issues unchanged. Up volume is swamping the down volume on the day, and that is often indicative of buy programs. Unchanged volume, 19.5 million shares. S&P 500 cash up 2.32. The March futures futures up 2.20 with a premium value of just under 2.5 points. Earlier, that premium had expanded enough to invite arbitrageurs to buy cheaper stocks and sell the futures contracts. Joining us now for a closer look at the market is Chris Carolyn, independent market maker in fancy options and futures at the Pacific Stock Exchange in San Francisco, California. Chris, what is the main reason behind the push in the stock market today?
Well, I think expiration factors play into it. I feel that a lot of the people who are on the short side are holding January options, and that's fueling the buying power, and that should continue through Friday.
All right, now what about fundamentally? Do you feel that the dollar is really also helping out the stock market at this juncture?
Oh, it certainly has been, and I think that has helped to, you know, in the sense also that plays into the interest rate scenario. As people see the stronger dollar, their fear of higher interest rates down the road lessens, and they're more willing to commit to stocks.
What about the cycles that affect the market at this point? You, I know, follow cycles very closely. With the Dow at post-crash high levels and other indices approaching their post-crash high levels as well, do you see any possible trend reversals in the offing?
Well, there are, and you know, I look in cycle work, I look for, or follow some of the work of Gann, and you know, he looks for equality in price and time, the idea that markets will move the same number of points in the same number of days. For instance, the August through October rally covered 200 Dow points in 60 days. And now we've done about 195 Dow points in 62 days. So this would be a point to look for some type of reversal, and I think we're starting to see some of the sloppiness that might be associated with that. But I really feel that the expiration pressures, you know, will preclude anything happening until next week.
Would the decline then equal the same magnitude of the gain?
No, it wouldn't, and you might actually look more for something similar to the November decline that happened post-election to mirror that.
All right, Chris, thanks for joining us today.
You're welcome.
Chris Carolyn, independent market maker in fancy options and futures. Diana Karicki is back now with a closer look at the broader market.
Well, the strong dollar is certainly helping out the Dow Industrials, now trading with a gain of better than 16 points on the session. Here's a look at the broader market and whether or not the strength is carrying over there. The NASDAQ National Market Systems Composite is up now 2/3 of a point on 56.8 million shares. The American Exchange Market Value Index is lagging a bit, up nearly half on 7.5 million shares. Coming up, Ron Insana will be chatting with John Bollinger in our Computers and the Market segment. In a look. Chuck, what is the reason behind the sell-off across the board in the meats today?
I think it's because we're not getting the movement of meat at the retail meat counters now that we're halfway through January. That supports prices for the live animals, for cattle and hogs that we have seen of late. We had some very wide fluctuating, severely fluctuating prices at the wholesale level through December and into the new year. The retailers found it hard to plan significant ad campaigns. Featuring has been on the poor side this month, and this lack of movement at retail is now kind of filtering its way through the chain back to the wholesale and now to the producer level. There's just a lot of uncertainty in the market right now. In the case of the cattle, we have had some sideways activity.